Hello guys, Dax here. Welcome to this video, and today's main topic will be how to grow a small account in 2021. Since there's a lot of stuff has been changed in the last 2 years, there's higher volume casting, there's different resistance, and there's different sector for us to trade to. Before I start this video, make sure to click the like button and subscribe. Let's get into the video. So to grow a small account, what I considered is anywhere between $3,000 to $10,000. And I do understand a lot of people want to have a decent method because when you have a small account, it is relatively challenging to grow a $3,000 account into $30,000 and potentially into $100,000. But there is a way to do it. So today I'm going to give you the most efficient and most effective way to grow $3,000 account exponentially to a higher amount. So overall, there is three structures or three disciplines that I follow. So first one will be you need to find a clear edge, which means that you have to find one type of pattern that can give you over 85% winning percentage for you to consistently grow your account without having a hiccup in the middle. And you can't really focus on too many patterns at once because you don't really have the equity to do it. So that will be one of the mistakes that beginners tend to make in their early stage of trading career. The second discipline I follow is that once you find the edge, you have to relatively increase your trading size, because when you only have a $500 account or a $1,000 account, it's really hard to make $100 a trade or $300 a trade, because at the very beginning, you want to start make some money that's relative to the account size. Let's say that you have a $30,000 account and you're only making $20, $30 per trade. That will take you a very long time to be consistently profitable and get used to the size that you want to start making relatively decent money. So you will need to have a decent risk management of how much you want to risk at, where you want to cover, and to be really good with your entry and exit, and to find what's your average cover point, what is your average entry point. Just in the broad area, making $10 to $20 per trade is a decent practice to get the rhythm of the market. But you will have to start going into a bigger size to really have a basic understanding of what's a real risk management and how to really manage your account size by trading multiple times in a week. So the third discipline that I use is you have to be consistently making money without making many mistakes. But we're beginners, we still have tons of mistakes to make in the future. So I made this plan to protect me from blowing up in the future, that I don't really have a second chance to trade in this market no more. So what I do is I will have a $3,000 account. I will grow it into $6,000 and $9,000. I will have two $3,000 backup account. If I tend to make mistakes in the future and I blew up my first account, I will still have a second chance for me to still follow my path, and to also to learn from my mistakes, so I won't make the mistakes again. A lot of beginners tend to put their money in one basket, and that's where they tend to make biggest mistakes, and they will never have a second chance to trade again. So those are the three disciplines that I follow up to date. I wish I know those three disciplines earlier in my trading career, but hopefully you guys can take this tip as your trading advice. And let's dive into a little bit more detail about risk management. So as I said, that when you have a smaller account, you want to size in a little bit more than people that have a $30,000 account or up to $1 million account. There's two different risk management for you to really understand how to really manage different account size. Understand a lot of you guys don't have a bigger accounts. In general, of a basic understanding that if you have a smaller account, you want to size in based on percentages. With a bigger account, you want to size in based on how much dollar you want to put into this specific ticker. So for example, when you have a $3,000 account, you want to size in 15% to 20% of your equity into this specific trade. Now for me, I split my patterns into three different sections. So section 1 will be the pattern that has over 80% winning percentage, which will be first red day, bounce short, oversitting gap down. Second section will be pre-market breakout, panic dip buy. And when I see that a pattern has an 85% winning percentage, I tend to size in anywhere between 20% to 25% of my equity. You can choose how much you want to size in based on the pattern's winning percentage, which will give you a decent risk-reward ratio, and also you can prevent big losses because lower winning percentage patterns are not very consistent. So you can avoid losses basically by sizing in smaller. Now for bigger accounts, when you have anywhere between 1 million to 2 million, you want to size in 800,000, 900,000 in one ticker. That's where it gets a little bit tricky because when you have a huge account and in this small cap industries that they can only accept 300K, maybe 400K in one ticker because there's only a limited amount of flow, only limited amount of people are trading it. So there's a limit to how much money you can make when the flow is only 3 million to 5 million and the market cap is under 100 million. And that's where you have to be really careful. Once you hit the cap, you can only size in a certain amount of money into one trade. So that's one of the problems for bigger accounts. But for smaller accounts, all you have to care about is how to manage your risk correctly and don't have to worry about liquidity issues. And that's where you can grow your account much faster than people have a bigger account in terms of percentage gains. For all these disciplines, let me repeat myself again. First one will be you have to have a good winning percentage pattern. Doesn't have to be more than 2. If you have 1, that's the best. That you have to keep consistently tracking your statistics to find your edge. Second one, once you have many patterns, you can build a risk management system on different patterns. As I said, that you can size in much bigger into a ticker that has 85% winning percentage. You can size in smaller into a pattern that only have 60% winning percentage. The last one is that you have to protect yourself all times. And if you tend to make mistakes, it's okay. Many people make mistakes. The problem is that you have to make sure you can keep consistently trading this market to gain experience in the future. So make sure that you have either 1 or 2 backup accounts to support your trading career, and that should be really helpful for you to be consistent and profitable in the future. Alright guys, that will be the end of this video. Let me know if you have any more questions or any topics you want me to cover. Make sure to leave a comment below, and don't forget to drop that like button. I will see you guys in the next video.